Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Will he or won't he? Markets whipsaw as President Trump denies he intends to fire Fed Chair Jay Powell less than 24 hours after floating the idea to Republican lawmakers. More letters in the Post. Donald Trump says he's notifying over 150 smaller trading partners they will face a tariff rate of 10 to 15%, while softening his tone on China as he eyes a meeting with Xi. Plus, we will be first with the numbers as European earnings season ramps up, and from Taipei, we'll bring you results from the chip giant TSMC. Earnings rating for Volvo Cars. This is a stock that's down about 45% in the last 12 months. Tariffs clearly in focus for this company. In terms of revenue for the second quarter, it is a beat for Volvo Cars, coming in at 93.5 billion Swedish krona, below, in fact, above the estimates of 88 billion Swedish krona. So it's a beat in terms of second quarter revenue for Volvo Car. Margins contracting by 10.6%. The estimates had been for margins of just over 2%. So margins being squeezed. We can probably tie that to the tariff story in the US. Volvo Cars saying they will be adding the XC60 production to its US plant. So that line in terms of production uptick for one of its models in the US on those tariff headwinds. Volvo Cars then with a beat in terms of second quarter revenue, but margins being squeezed. We will be speaking to the CEO of Volvo Cars in about 10 minutes' time, so stay tuned for that interview. In the drug space now, Novartis coming through with a top line. This is the redhead on Novartis, raising its 2025 core operating income guidance. So it's a raise of the guidance for Novartis for 2025. We know the focus there as well is on conversations between the Swiss government and the US over potential tariffs on the pharmaceutical sector. Novartis still seeing 2025 sales growth in the high single digits, but it now sees 2025 core operating income up by the low teens. Again, full year 2025 guidance raised for core operating income. It's a beat on the second quarter core earnings for Novartis. Let's get to the broader markets then as we weigh up, of course, earnings. We had them crossing through from the US banking space and, of course, the latest lines when it comes to European companies. And we'll have those conversations throughout today. European futures then set to break and snap 4 straight days of declines, pointing higher by 0.7%. So on the front foot as we close down to the open at 8 a.m. UK time this Thursday. FTSE 100 futures also on the front foot, looking to add 38 points. S&P E-minis pointing a little softer by 0.1%. Will he or won't he is the question, of course, around Jay Powell as President Trump ups the ante. Nasdaq 100 futures pointing lower by 33 points. Let's flip the board and have a look cross asset then. You've actually seen the dollar moving higher in the session today. Euro dollar then weaker, the single currency a little softer on the back of dollar strength, down 0.1% euro dollar at 116. 447 right now on the benchmark US 10-year yields, up close to 2 basis points. And you're seeing that across the curve. Of course, bond investors squarely focused on what happens ultimately with Fed Chair Jay Powell. Brent trading higher at 0.4% higher at $68 a barrel, and Bitcoin down by 1.3%. There is some regulation working its way through Congress in the US when it comes to cryptocurrencies. Let's cross over to Asia right now and check in on how the markets there are faring. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing Asia stocks mostly moving sideways. There is a concern, though, about the Fed's credibility getting undermined. That's adding to a layer of risk for markets that have already been grappling with the tariff uncertainty, on the lookout for those 150 tariff letters. That being said, among Asia equities, we're not seeing that sort of major repricing, and the benchmarks have mostly just been moving sideways. Now, among the assets that we're watching, of course, we're keeping a close tab on dollar yen, and this is coming ahead of an upper house election this weekend in Japan, where some polls show that the ruling coalition could lose its majority. And not just that, data today also showed export sliding in Japan, which adds to the risk of a technical recession. So this bearish view that's emerged on the Japanese currency, there is more room to run. Some thinking 150 against the greenback on dollar yen. Now let's flip the board, also just highlighting some of the other areas of disappointment when it comes to Japanese stocks, because we did see Couche-Tard pulling out of its bid to buy 7&I, the convenience store operator in Japan. Stocks there plunging because this adds to the disappointment for a place, Japan, that have been seen as an area of M&A activity. Among that, also keeping close tabs on a couple of other stocks in Asia, including TSMC ahead of earnings. It's expected to extend its growth streak, but SK Hynix has been underperforming today as well. It got downgraded by Goldman to neutral, which cited increased competition for the NVIDIA supplier. Tom.
Avril Hong in Singapore, checking in on the Asian markets for us. Avril, thank you. Now, Donald Trump says he did ask Republican members of Congress whether he should fire the Fed Chair Jerome Powell, but now says he has no plans to get rid of him. The US president was speaking after the closed-door meeting leaked to the media.
Have you drafted a letter?
I haven't drafted a letter.
So you didn't show a letter to Republican lawmakers last night?
No, I talked about the concept of fire him. I said, what do you think? Almost every one of them said I should. But I'm more conservative than they are.
Let's get more on this from Bloomberg's Katia Dimitrieva. Katia, lawmakers then who were at that meeting and in that meeting with the president say they left with the impression that Trump does indeed plan to fire Jay Powell soon. What happened then? Has he had a change of heart? Is he testing the waters? What do we read from this?
Well, it really is just the latest in this saga between President Trump and Jerome Powell. This goes back to his, the first days in office. And so far, we've heard Trump and officials in his camp calling for Jerome Powell to be fired or to step down, largely because they don't like what he's doing with monetary policy. They would like to see rates lower. They want to help the economy grow. And they've really been critical of him for that. Now, the difference this time, and we've heard sort of over the past week, is that they might actually be coming after him now with another issue, this issue of what they call fraud. This is the $2.5 billion renovation of a couple Fed buildings in Washington, D.C. And what that's led to is basically President Trump and some folks from his administration claiming that this is too much. This is kind of poking holes in why there needs to be that much money spent. And that is kind of a change from what we've been hearing, because we've gone back and forth on this in recent months, right? We have Trump saying, I'm going to fire him, but I'm not going to, but I might, but maybe I'll change my mind. And this is sort of this move towards this issue of fraud or alleged fraud. It opens up a new dynamic. It opens up, frankly, a new way for the White House to take steps on this. Now, of course, markets would not be very happy about that. We saw kind of some back and forth trading on that, because the central bank independence is key to markets, to the economy, to currency, everything, you name it. So it would definitely be a challenging move for Trump to do.
Yeah, indeed. But he has challenged convention before, hasn't he? So we'll see how that story evolves, with Fed independence now fairly in focus, and squarely in focus, of course, with big question marks there. What is the latest, meanwhile, on the tariff front, Katik, as the president has been talking again about these letters?
Yeah, we heard that 10 to 15% is probably going to be the rate for most small countries. So this goes back to a couple months ago when he said we're going to have Liberation Day. We're going to announce these big tariffs on a lot of the major trading partners we have. And basically for everyone else, they'll probably see a base rate of 10 to 15%. And, any tariff is probably not good for business. It's not good for trade. But when you think about a 10% tariff versus 20% or higher, which has been floated, especially for economies like China. I was talking to an economist this morning from Natixis, Alicia Garcia-Herrero, and she was saying, basically we need to be thinking about potentially the tariffs on Indonesia and China as sort of the top range now. In other words, if you're a smaller economy and you had tariffs of 30, 40% on your goods, well, you're kind of in luck now because it's going to be a lot lower. So that's sort of the position we're in where, yes, tariffs were announced, not necessarily good, but it could be good in the context of what could have been.
Yeah, it needs to be framed within that context, doesn't it? 10 to 15% less severe than previous numbers floated, of course, by President Trump. The UK did get a framework deal with the US, of course, one of the first countries to do that. But they're still pushing for an exemption when it comes to steel. That is still a sticking point between the UK and the US. Where do things stand on that front?
Yeah, this is a big development. So we heard, we'll remember that UK and US had one of the first trade deals that came out, one of a handful of countries that was able to negotiate a bilateral deal with Trump, at least so far. And the one sticking point is that UK officials, they wanted to make sure that the steel that they sell to the US would be counted as UK steel. In other words, would not get a tariff. This is huge for the economy. It's huge for the government, of course. As the economy slows, they want to get that win. But unfortunately, the deal did not include that. And so if officials are now telling us, or sources are telling us, that this potentially this sticking point could be removed, we could see that deal hammered down and we could see it, signed on the dotted line, because that was one major thing that kept it from crossing the line. In other words, the steel that the UK is getting from other European countries is being melted down or is being remade. They want to make sure, of course, that that's treated as UK steel, not as another country and potentially tariffed higher. So this would be a big deal. It would allow for a lot more trade in this product. And of course, as the economy slows, they definitely want to see that get resolved as well.
OK, Bloomberg's Katia Dimitrova, thank you very much for that update, of course, in terms of the 10 to 15% floated by President Trump and the UK continuing to push for exemptions around steel. Now, with his threats to fire Jerome Powell, President Trump has once again demonstrated his power, of course, to shake up global financial markets. Let's bring in Bloomberg's Valerie Teitel right now. Val, how did the markets react to the back and forth around Powell yesterday?
Look, it was a wild 90 minutes between these leaks to the media and then Trump's denial in the Oval Office, where we saw this Sell America theme come back into the market, where we had the dollar weaker, Treasury yields higher, especially in the long end, and equities lower together. Kind of a flavor of what we had on April 2nd, maybe giving a hint to the market that if Trump does dismiss Powell, it could really throw U.S. assets into a tailspin. Our own Anna Wong from Bloomberg Economics thinks this was a trial balloon from the president to see what the market reaction would be. And once he did backtrack this decision 90 minutes later. But there does seem to be an increased risk of escalation between the White House and the Federal Reserve. Note that this price action yesterday was off of these odds of Powell's dismissal, going from around 20% to rising to around 40%. I was looking at the polymarket odds on this yesterday. 40% of of the likelihood that Fed Chair Powell would be dismissed by 2025 was the extent of the move. That's the highest odds that we've seen so far this year. Tom.
Bloomberg's Valerie Teitel, thank you very much indeed. Coming up, we are going to be speaking to the CEO of Volvo Cars as they report second quarter earnings. That is next. This is Bloomberg. Good morning. Happy Thursday. Welcome back. Earnings front and centre for us today, of course, as we continue to weigh up the impact of Trump's threats around J. Powell. Volvo Cars coming out then in the last couple of minutes with revenues in the second quarter that came in above estimates, 93.5 billion Swedish krona in terms of second quarter revenues. That was a beat on the estimates. Margins, though, are under pressure, contracting a little over 10% in the second quarter. And there was an operating loss of just shy of 10 billion Swedish krona. The estimates had been for a small profit of 1.8 billion. That did not come to the surface in the second quarter. Let's bring in the CEO right now of Volvo Cars, Hakan Samuelsson. Hakan, good morning. Thank you for joining us. What for you are the key takeaways from these results? We talk about the beat in terms of revenues, but margins are clearly under pressure. Is that a tariff story?
Partly, but it's also more or less what we expected. It's the same picture as in quarter one. Market with headwinds, and we need to take actions to really lower our cost, and that's what we did with our turnaround program. And I think my take of this quarter is that we are seeing that this turnaround program is really well on track, and we are beginning to see the first result, and we see it where you would expect to see it, and that is on the free cash flow, which is clearly better in Q2. I think that's the most important thing for us, for me, with this quarter. Otherwise, the market will not give us any help looking forward. It will probably continue.
Yeah, okay, so the free cash flow is improving as you push through that turnaround plan. Where are you in that turnaround plan? Is most of the pain behind you now, or is there more pain ahead in terms of creating efficiencies and cutting costs?
I think we are starting, for example, indirect cost. We are well underway. We are going to take out 3,000 headcount, and I think right now we have around 1,100 already left the company. So we are well on track with the indirect cost savings. Then we also work to save around 3 billion on the direct cost side. And then we have a very good cooperation right now on the really part number level with Geely, where we are looking into to see how to bring down that. And then the big chain is then with cash and working capital measures, which is showing very good result, as I say.
Last week you took that impairment charge, of course, $1.2 billion US. Part of that was the tariff impact. Part of that was a delay in terms of delivering some of these EVs, some of these new models. Hakan, where is that as bad as it gets, or should we brace for further write-downs?
No, I think we have done that now to really come in balance. And I would say the biggest reason for that was delays. You know, our very good new premium cars are finally out on the road and sold now, but I mean, they are 2 years behind schedule, and that of course means a lot of extra R&D expenses and lost revenues. I think that is the biggest reason for the write-off, and that we now have behind us. The car is now finally out on the market, and I think it's the most premium, best car we have ever made. So I'm really expecting that to pick up now.
On the margin story, so we saw that contraction at a little over 10% in the second quarter. What are margins looking like in the current quarter? Are you starting to see a turnaround?
No, you see it in cash flow first, but it will come, and then all cost measures are coming by the end of the year, and full effect we will see into 26. But I mean, we see exactly the actions we are taking. We know what that will deliver, but it will take some time. So I think we are very confident that we will see 18 billion total improvement from our package in 26.
Okay, and you've said the ES90 is not profitable right now in the US because of the tariff impact. You've also revised your financial assumptions for the EX90. What does that all mean for your ability to grow volumes into the future?
The sedan is impossible to sell. You know, I think we have 150% tariffs. So as long as that stays between China and the US, we have to sell that car in China and Europe only. So that's, of course, is a small impact on this write-off. And then the SUV, that's made in the US. But unfortunately, still, we are importing too much material for that car. And then on the imported material, we also have to pay tariffs. But of course, we are now localizing more material in the US to bring that down, but it will take some time.
On production in the US, give us some specifics, Hakan, if you can, in terms of ramping up production in the US and what that looks like.
Yeah, the EX90 right now is on a very low level. I think we are maybe on 20,000 cars together with Polestar. That has to improve. But then we also added a new, really popular car which sells in large volume in the US, and that's the mid-size SUV, XC60. And that sold in the US last year around 40,000 cars. So, I mean, with that addition and then the electric cars we already have in South Carolina, we should have a good utilization of that plant.
Tesla's looking vulnerable in Europe and possibly in the US as well. Are you taking market share for Tesla? Are you seeing Tesla owners swap up their cars for Volvo?
Yes, I think you could say that. Very difficult to prove, of course, but you see Tesla is going down in the ranking and we are keeping our position. So I think a lot of customers are looking into alternatives to Tesla, and we are picking up some of them for sure.
Okay, Hakan Samuelsson, CEO of Volvo Cars, on the back of those earnings in the second quarter. Sir, thank you very much indeed for your time. Sticking with Volvo, but this time in the trucking space, we have some lines crossing in terms of their earnings, of course, for Volvo Trucks. Second quarter adjusted operating profit, it's a beat for Volvo Trucks, 13.5 billion Swedish krona. The estimates had been for 13.12 billion. So in terms of adjusted operating profit in the second quarter, that is a beat. In terms of what is happening full year, North America, they moved 275,000 units in terms of trucks in North America. In China, 710,000 units. Profit, again, coming in. Second quarter profit at 9.96 billion. So I gave the adjusted operating profit, which is a beat, but on the second quarter operating profit, without those adjustments, it's actually a miss. It's 9.96 billion Swedish krona. The estimates had been for 13.16 billion. So some lines crossing that from Volvo Trucks. Coming up, Wall Street banks report more bumper earnings. We'll have the details on the banking space next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the stories making the news this Thursday. Goldman Sachs has posted the best stock trading quarter in Wall Street history, with second quarter equities revenue hitting $4.3 billion. That is about 600 million above analyst forecasts. Strong gains in intermediation and financing also drove profit past expectations. Bank of America's traders also posted a record second quarter, reaping the benefits of volatile markets, while net interest income topped analysts' estimates. Investment banking revenue and loan growth also outperformed expectations. CEO Brian Moynihan says consumers remained resilient and the bank saw good momentum in its markets business. JPMorgan racked up $30 billion profit in the first half, more than double its closest rival, and widened its lead over Goldman Sachs and Morgan Stanley in investment banking revenue. The bank's market value now exceeds that of Bank of America, Citi and Wells Fargo combined. But CEO Jamie Dimon says all its competitors are growing and expanding, and fintech companies are plotting to take big chunks of JPMorgan's business. President Trump says Coca-Cola has agreed to use real cane sugar in its products sold in the US. Coke's original soda is currently sweetened with high fructose corn syrup. Trump's health secretary, RFK Jr., has said the syrup contributes to making Americans unhealthy. Shares in corn syrup maker ADM fell late in New York on the news. Here's what else to have on your agenda today. 7 a.m. UK time, then we're going to get jobs data in terms of wage growth and the unemployment picture in the UK. As we know, some employers are starting to cut back on headcount as they try to offset the impact of higher taxes in terms of national insurance contributions. At 1:30 p.m. UK time, we're going to get US retail sales, so a touch there on the US consumer. And after the bell, Netflix earnings, which we will break for you. Coming up, chip giant TSMC, the foundry giant, of course, set to report earnings. We will bring you those numbers as they cross the terminal. We'll be live in Taipei. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Will he or won't he? Markets whipsaw as President Trump denies he intends to fire Fed Chair Jay Powell less than 24 hours after floating the idea to Republican lawmakers. More letters in the Post. Donald Trump says he's notifying over 150 smaller trading partners they will face a tariff rate of 10 to 15%, while softening his tone on China as he eyes a meeting with President Xi. Plus, earnings from chipmaker TSMC crossing the terminal right now. In the second quarter, net income for TSMC, the key foundry company, of course, crunching out the chips for the likes of Apple and Nvidia, coming through with a beat. It's 398 billion Taiwanese dollars. The estimates had been for 376 billion. So it's a comfortable beat in terms of second quarter net income for TSMC. Gross margins increasing at 58.6%. A 58.6% gross margin in the second quarter, above the estimates of just shy of 58%. So we had been focused, of course, on the AI theme, renewing optimism around TSMC. The stock is up about 6% year to date, but up about 44% since Liberation Day, as you can see on that chart. And the AI demand expected to offset continued relative sluggishness when it comes to demand for smartphones and PCs. So it's a beat in terms of the top line when it comes to net income in the second quarter and gross margins for TSMC, of course, the dominant foundry when it comes to churning out chips, everything from AI accelerators to Apple iPhone chips as well. Let's get back to the broader markets now. We'll get you more details on TSMC shortly. But across the broader markets, we continue to digest earnings when it comes to Europe, with ABB coming out as well. That was a beat for the robotics and electrification company. We're going to be speaking to their CEO shortly. Volvo Cars, revenues coming in higher, but margins squeezed. And, of course, we're digesting the bank earnings stateside. European futures pointing to decent gains of 0.7% after 4 straight days of losses. FTSE 100 futures looking to add 43 points. S&P E-mini stateside looking a little softer, down 0.1%. Nasdaq 100 futures currently flat. Let's flip the board and have a look cross asset then. You did see a bit of movement in terms of bonds selling off and the dollar under pressure yesterday on the whipsaw around Jay Powell and the threats of him being toppled by the US president. Fed independence now firmly a question for these markets. 447 in terms of the benchmark 10-year yields, just up just shy of 2 basis points. Euro dollar at 116, a little softer on dollar strength. Brent at $68 a barrel and Bitcoin down 1.3%. Let's get to the earnings story now around ABB, the industrial giant, of course, supplying some of the major companies around there with robotics and automation solutions. Switzerland's ABB reporting better than expected order growth and profit margins in the second quarter. This as its business selling factory automation tools was lifted by a large order. We're joined now by the CEO, Morten Wierod. Morten, good morning. Thank you for joining us. Talk to us about the demand picture, because on some levels it's counterintuitive given the tariff impact. You sell, of course, into China. You sell, of course, into the US. Are tariffs being offset by demand from your customers?
Yeah, the underlying trend of electrification automation is very strong across the board, and that's what we see also reflected in our second quarter results, which is up 14% of our order intake. So, and it comes really across the board, and all our 4 business areas show growth and a positive book-to-bill, and we're able to take maybe also take some market share, but it's a good market out there for us in electrification and automation. The world continues to go electric really everywhere.
If you are seeing customers pulling back and cautious as a result of the trade frictions, where are you seeing that, Morten?
That is where we see some kind of uncertainty and delay of placing orders is in the automotive industries. Somewhere kind of in the machinery and our robotics business. That is where people are kind of getting more concerned, and there is where tariffs has really played a role when it comes to order intake. But for the underlying trends are still strong, and that is why we see this good order intake. But those are pockets where we see small kind of delays, and then you have the overall. The only kind of, I would say, weaker markets is where we see it in the residential, in the building side, but commercial buildings still going pretty well across the world. But that's the only places where I see I kind of have some concern or where I say future upsides in those markets.
Specifically on the auto market, Morten, when do you have clarity in terms of when that turns around, when your auto customers start to improve in terms of their optimism, their appetite? Do we need clarity? Do we need a clearing move, essentially, on tariffs before the auto industry turns around?
Yeah, I still believe that will take some time because they are, as you say, that clarity on what will have an impact, where the tariffs are going to end, especially between Europe and the United States, but also inside North America. I think those are where we see trends where kind of decisions are not cancelled, but they are delayed. They are postponed, just in the wait there to see. But so it probably will take a quarter or two. But it's very hard to predict when the trade deal is struck these days. I think your guess may be as good as mine there on that point.
Yeah, indeed. The deadline keeps moving, doesn't it? On the strength in the US, and you've seen a big order in the US market. Is that a one-off? Are you seeing sustained strength as some of these industrial companies stateside try to build out their footprints there? What are the dynamics you're seeing in the US market right now?
We see still a very strong and good development in the US. We had one large order in this quarter, but also if you see the underlying business, the base business is growing close to double digits. So there is still a very strong trend on the utility side, electric utilities. They need to invest because the power consumption, especially in the form of electricity, is increasing and the data center, ABB, we showed more than double-digit order growth again in our data center business. That's and it's a very strong segment, and we are confident also for the rest of the year and the year onwards in that segment. We see also that the development and the build-out on data centers, that is with the AI wave that is over us these days, that trend is going to continue for a long time.
OK, so to be clear, with the US story for ABB, this is a data center story more than a Trump success story in terms of encouraging companies to expand their industrial base in the US. This is all about data centers.
No, it's all not only about data centers. It's the whole electrification trends of industry. You see large investments these days in from power generation, LNG terminals, from fracking terminals and transportation pipelines of gas. So and the gas is needed for new power plants that are being built. And we see, so the whole electrification network, the grid on the United States, needs significant investment that benefits ABB as well. And then it's the whole usage of electricity as well, data center being one. But everything is really going electric, also in the United States. And that is what you see, that electricity is the power source that is growing faster than any other.
Yeah. Any sign of a turnaround in the Chinese market?
We had a positive order development also in China, about 2% this quarter. But also there are quite big differences. Also there are big investments in renewables in China, big investments in data center. But the construction market and the building market is still weak. And I think that will remain for quite some time. So you will see from the average of two is from strong growth in some areas to weakness in others. So that's where kind of how we see the Chinese market. And I think that will continue also. That trend will continue for some time, at least for the rest of the year.
Morten, give us the scoop on the robotics unit. Do you spin this off? Do you list it? Analysts saying this could be a real boost to the stock.
Yeah, we are planning for and preparing all the carve-out activities for a listing on the second quarter next year. And we will come back with the details where and so on. But the plan is very clear. It's a listing activities ongoing. And we are on track for, as we promised after last quarter, that we're going to do this in second quarter next year.
OK, where do you list, Morten?
That's not finally decided yet. So we'll update you as soon as that decision is made. OK. Morten Wierod, CEO of ABB, on the beat, coming through for those results. Strengthen the US market. Sir, thank you for your time this morning on the back of those earnings. Now, chip-making giant TSMC has also beaten estimates for the second quarter net income. Let's get more details with Bloomberg's Annabelle Drulas, who joins us from Taipei on the ground for us. Walk us through the numbers then, Annabelle.
Tom, these have been really strong numbers across the board. In fact, beats across a number of different metrics. So we're here in Taiwan for the earnings conference that's just about to kick off. And I wish you could actually see how many people have been queuing around the corner to get into that hall where this starts in about 20 minutes from now. But I've got the earnings with me just here going through some of those figures. And as I said, beats on a range of different metrics. But revenue, for instance, in the second quarter increasing nearly 39%. When you compare it quarter on quarter, that's on the year, but quarter on quarter, you're looking at still a jump of around 11%, a 10% increase in net income as well. So again, strong figures coming through. The currency impact you can see as well having a bearing here, because when you look at it in US dollar terms, actually the numbers were even better. But that rapid appreciation of the Taiwan dollar we've seen over the past couple of months has had an impact on the bottom line. What else we're seeing is gross margin. Again, healthy here, coming in at 58.6%, operating margin as well, 49.6%, but you're beating analyst estimates. And what's interesting as well is that TSMC is actually increasing profit at a faster rate than sales. And that tells you that more of its revenue is coming from those more advanced semiconductors now that are more expensive as well for their key customers.
Yeah, they have pricing power, don't they, when it comes to some of those specialist nodes. Look, Annabelle, the earnings call, 7 a.m. UK time, 2 p.m. where you are in Taipei. What are you going to be looking out for?
I think there's a few different things that are going to be really key going into these figures. I just mentioned that currency risk, how they actually are managing that. It's been a big headwind for a lot of different Taiwanese semiconductor firms over the past couple of months. But adding to that as well is what they say in terms of any trade or tariff risk. So yesterday we had reporting from the Taiwan government. They are confident that they can make a deal with the Trump administration before the August 1 deadline. But how TSMC is thinking about those risks, as well what they're planning around CapEx. Would they be looking to bring forward any of their investments in the US in particular, given that there are as well some tax incentives in place for them to break ground on new plants by the 2026 deadline. So whether we get any sort of announcements around that. And then lastly as well, in terms of their tech advancements, because we've got 2 nanometer that's expected to come online toward the end of the year, ramp up, and how they're going as they work toward that as well will also be really key.
OK, Bloomberg's Annabelle Druller's on the ground for us in Taipei, breaking down the earnings coming through from TSMC. And you can catch Annabelle's interview with the TSMC CFO, Wendell Huang, on Bloomberg Television tomorrow. Now, Republican conservatives have dropped a 2-day blockade of industry-backed crypto bills, opening the way for House votes on a series of measures backed by Donald Trump. The hardliners ultimately gave way after facing pressure from the president, who has embraced digital assets and been promoting the upcoming votes as what he calls Crypto Week. Coming up, finance ministers from the world's biggest economies are meeting in South Africa. We'll be reporting live on what is on the agenda. Stay with us. This is Bloomberg.
We are in very close contact both with the European Union. We are part of the internal market, but also with the United States. We have, what should I say, a good tone. We are addressing some real issues. Again, it's too early to conclude, but the ambition is to prevent increases in the tariffs.
Norway's finance minister Jens Stoltenberg talking about progress on trade talks. Now, the world's most powerful finance ministers, meanwhile, and central bank governors are gathering in South Africa for the G20 meeting. Attention firmly focused, of course, on limiting the fallout of a global trade war. South Africa's finance minister says many sectors will be hit.
For all of us who are exporting to the country that imposes tariffs, there is an impact on output. And in the case of South Africa, the biggest impact had come through the automotive industry and the agricultural sector. The issue about tariffs also raises important issues. We are having to grapple with what would this mean for the outlook of the U.S. economy.
Well, for more, let's bring in our chief Africa correspondent, Jennifer Tabasaja, who joins us from Ballito in South Africa, where, of course, these G20 meetings are taking place. Jen, so you've been speaking to ministers on the ground. What is the mood? What is the sentiment amid all these trade tensions?
Right, Tom. I think South Africa, as the first African nation to host the G20, was hoping that this G20 summit would be squarely focused on a number of the issues that they actually went into the presidency focused on, which, if you read the theme, it's equality, solidarity, and prosperity for these countries. But really, if you look at a number of the officials that we've been speaking to, the trade tensions and the geopolitical tensions that we've been seeing have been making their way into a number of conversations, as we were just showing there, and two of the conversations that we did have yesterday. Now, one of those that you had just played there, the South African Reserve Bank Governor, Kganyago, we wanted to talk to him about just how they're focusing in on the discussions over the next 2 days. We've been hearing from the deputies, the finance ministers and central bank deputies over the past 2 days. Today is the first official day where we'll see the top brass coming in from the G20 countries. And he said that the focus is still squarely on what South Africa came into the presidency for, which is seeing how the country can align the global South priorities with that of global reform. But still, he noted that there is a lot of uncertainty out there. And so it might be unclear, or we might not actually see a consensus at the end of this summit and at the end of this presidency. So it's going to be really important to pay attention to who exactly is at the table. We know, of course, Treasury Secretary from the U.S., Scott Bessent, is not here. The U.S., though, did send another part of the delegation that is here. So the U.S. is represented. But the question is, how far will the U.S. be willing to agree to some of the reforms that South Africa and some of the other countries, many that are a part of the BRICS nations, that the U.S. and President Trump has actually targeted as well? How far will they be able to go in convincing some of the other major players within this bloc to come to an agreement at the end of this presidency?
OK, so those are some of the dynamics at play, the dynamics that South Africa wants to pursue, and then, of course, the global tensions around trade. How are those things expected to impact how these meetings evolve over the next 2 days and what the outcome could be?
Right. So the focus over the next 2 days, Tom, is really on a number of issues that the finance minister and central bank governor here in South Africa laid out for the leaders that are coming here. That's focused on things like AI, navigating the AI era. That's also labor and labor market implications, addressing the natural catastrophe insurance gap, making cross-border payments more efficient. And so we'll hear a number of discussions from leaders about that when they do actually get on the ground in just a few hours. We'll also see UK Chancellor Rachel Reeves is going to be here. She is expected to meet with a number of companies and investors, potentially to tout Britain, but then also potentially opportunities for collaboration. But the question again will be, what, if any, consensus will these countries be able to move closer to a consensus for the eventual leader summit that's happening later this year? This is the third time that these finance ministers and central bank governors have met during the South African G20 presidency. And of course, so much has changed since the last time that they met. You've been speaking all morning about that looming deadline for a number of these countries that make up the G20, the tariffs that they're facing, the own commitments that a lot of these leaders are facing domestically. And so whether or not they'll actually be able to actually sit at the table and hammer out a consensus and an agreement that makes sense for this multilateral forum is really what we're going to be paying close attention to. But it's just going to get underway in just a few hours here.
OK, Jennifer Tabasaja on the ground for us, of course, in Ballito at that G20 conference, our chief Africa correspondent. Worth noting as well, and Jen pointed this out, that we heard from, of course, and she was speaking to the central bank governor of South Africa, not the finance minister. So that was the central bank governor. We have a host of other interviews as well from the G20 meeting in South Africa throughout the next couple of days, including conversations with the OECD Secretary General and the finance ministers of Sweden and the Netherlands. Now, some of the stories making the news this Thursday. Germany rejecting the European Commission's €2 trillion budget proposal just hours after it was announced by Brussels. The pushback by the EU's largest member state, of course, points to the battle ahead for the Commission as it tries to get buy-in for its next 7-year budget, which begins in 2028. A German government spokesman said the plan was unacceptable at a time when member states are making efforts to consolidate their national budgets. The UK and Germany are set to sign a new treaty in London today that includes a commitment to assist each other in case of armed attack. German Chancellor Friedrich Merz, who's visiting the British capital, has vowed to join forces with Prime Minister Keir Starmer to confront challenges like Donald Trump's trade onslaught and the war on Ukraine. Syria's president has vowed not to allow the country to be dragged back into war following Israeli strikes on Damascus. Its military targeted Syria's military headquarters yesterday and moved more troops to the border. That's the IDF. Of course, Israeli forces have stepped up operations this week after deadly fighting between Druze, Bedouin groups and Syrian troops in the southern parts of Syria. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So it was the team at Deutsche Bank over the weekend who put out that note saying that markets are underpricing the risk of Jay Powell being forced out of his position before, of course, his term officially ends in May of next year. Now the poly-market betting odds have caught up with that view from the team at Deutsche Bank, particularly, of course, on the comments from President Trump yesterday and the reporting that he had indeed flagged in front of senior lawmakers the option of whether or not he should fire Jay Powell. Fed independence then in question, and the odds have spiked in terms of the pricing and the betting odds around whether or not Jay Powell will be forced out earlier, reaching almost 40%. Despite that, let's flip the board and have a look at how the S&P 500 recovered yesterday, despite all of that concern about Fed independence and what happens to Jay Powell. You had that drop on the back of the news initially, the reporting, of course, from Bloomberg and others, and then you regained and made up for those losses to end higher at 0.3%. So are the guardrails off when it comes to the equity markets, and could that actually give President Trump a little bit more desire to go after the Fed and indeed pursue his trade policy with more aggression, given that the markets continue to bounce back from these moves lower? Let's flip the board and have a look at the data preview around the UK. We'll be breaking this in about 5 minutes' time, a little less than that. Jobs data in focus, wages, of course, and the unemployment number. We know that many corporates now have cut back here in the UK. This is a challenge for the BOE. Higher inflation, a softer labour market. Where does the BO stand on that as markets continue to reprice around cuts from the central bank of the UK? Plus, a reminder, the CEO of EQT will be speaking exclusively to Francine Lacroix on the Pulse. That's at 9:45 London time. But before that, it's the opening trade. Stay with us. This is Bloomberg.